Another crazy day in the markets, and equities are no exception. We saw equities open up, triggering breakers right after the initial opening on Sunday night, and it sets the tone for the entire session, leading us up in today's afternoon trade. We trade down to make new lows on this recent move. We rally back above the breaker briefly, only to end the session back on session lows. So it looks to me like the risk, the run for the exits, the flight to quality trade, whatever you want to call it, it's continuing here, and it's continuing to be exacerbated by lack of information, by headlines, by fear of recession now that's being thrown around. And if you look over in Treasuries land, you got Treasury yields at all-time lows. You've got a 30-year Treasury that traded below 0.9 and a 10-year that traded below 0.5. So obviously there's a lot of disconnection here. And when we talk about any sort of bounce, any sort of recovery here in equities, it's not all going to happen in one day. And I think the market, buyers here over the last year, or even going back several years, have been used to seeing these types of dip trades, seeing these sell-offs, and then being rewarded very quickly for buying. And we're not seeing that here. So this could be more of a sustained trade lower, has some more downside to it. But the up trade is going to be just as hard as the down trades are. They're going to come and go very fast. And that's what we've learned here in a very short period, how equities have moved back and forth, but still leaning towards downside trade, at least we are today. Market volatility, well, again, we're at the highest we've seen the VIX index. Today we printed as high since December of 08. Obviously, remember that 08, that was in the heart of the financial crisis, which really changed everything as far as central banking and market reactions and whatnot. And at this point, just to give you a little color on where volatility is expected to go, the par calls in the VIX, the 100 calls in the VIX that expire tomorrow were bought today. Now, they weren't bought in size, but they did trade. So there is a buyer out there that thinks the VIX can go to 100 tomorrow, or has risk that it does. So that's where we are right now in this world. We're seeing volatility on extremes. We're seeing price indices swaying back and forth on extremes. Treasury yields on the extremes, oil prices on the way down. It's everything coming together all at once, and there just isn't enough room in the doorway to get everybody through. Now, as we look ahead, what could change here? What's going to cause the market? We have some inflation data coming up. I don't really think that the day-to-day, the month-to-month data is going to be very, very much of a mover here, a market mover. Sure, it could give us a little bit of a positive note if inflation comes in, market friendly. However, I think it's more about more headlines, more information. What are central banks going to do as opposed to what they say they're going to do? Obviously, the Fed's expected to cut another 50 basis points at March FOMC next week, possibly again at the April FOMC. But how is that going to solve all the market's problems that we've seen here? And does it really do any good? And obviously the Fed's got their hands full here, and they're going to have to quantify whether or not they're going to be cutting rates. That would typically be very bullish for equities. However, if it doesn't really have a monetary effect, what we're seeing in the effects of this coronavirus and the expectations of where it could push the economy in the days, weeks, and quarters ahead, I don't know how much good it's going to do to be cutting rates aggressively here, other than for the Fed to say we're here to step in to do what is necessary. So at this point, a lot of that risk falls on the feet of the Fed, but obviously the headline risk remains very high. And again, it's about positioning here. When do major investors look to get in, and look to, more importantly, when are they going to get out? And that's what sees these big price swings. So at this point, equities going to see a very choppy trade up and down, but looking for lower prices, at least for right now, in the short term.